Hi guys, welcome back. Roy Cuzin's here, partnered with Liteforex broker. We're giving you really top level training educational sessions every Thursday. And last Thursday, I declared that we're going to have a two-part session. The first part was going to be all about Fibonacci correction analysis. I showed you the corrective cluster. And I specifically said that this week, this Thursday, we're going to have the second part of the session that's going to be about, well, the opposite direction, right? The projection analysis. So it's going to be really fascinating. I'm going to demonstrate on the cryptocurrency market just to show you that everything I teach you here, all the techniques, all the strategies are applicable to any market. So let's go ahead and we're going to analyze the Litecoin and the Ripple, which I personally have interest. I have positions in these two coins, so it's going to be really interesting to see the application of what I'm going to teach you, which is the projection analysis, Fibonacci projection analysis. Let's go ahead and start. All right, guys. So you're looking at the Litecoin. This is the daily chart. And I'm going to show you just a case study that I was actually pretty much involved with, and it was a few months ago. So, you know, the market was on the downside, right? There's a bearish market in the cryptocurrency space, and most of the coins, if not all of them, were pretty much on the downside for the past year, ever since the beginning of 2018. So I was noticing that downside move, and I followed up with the Litecoin, particularly speaking, and I saw that around April, it began to go upwards, right? So after the first downside segment came this upside correction, and I suspected it might be just just an upside correction. And when I saw that price, after reaching some peak, began to fall back and basically return to the original downside trend, this is where I questioned the potential of the downside move. So whenever we try to, figure out the potential of a downside correction or an upside correction, we're using the corrective clusters and, the corrective Fibonacci correction analysis. But here I was trying to figure out the opposite. I was trying to figure out the likelihood of the continuation of that particular trend, because obviously this is a downside trend. I saw the upside move, the counter trend move, figured out that it was just a correction and price should resume the original move, which was downside. So here's how you measure a potential target, right, for a continuation of a trend. Now let me pull out the Fibonacci tool. So it's the same tool, right? The same tool, the same place we went on the previous occasion when we were doing the corrective analysis. So we're using the same tool, right? Here, let me show you this. Let's start from the beginning, right? Let's put the default. So if you remember, we were focusing, last week when we did the correction analysis, we were focusing on four levels: the 23.6, the 38.2, the 61.8, and the 76.4, right? These were the levels we were focusing on, all of which, by the way, are below 1, because it's about correction. Here, we're talking about the opposite, kind of the opposite side of the spectrum, where we're focusing on numbers that are above 1, because we're trying to measure a projection rather than correction. So here are the four levels you want to keep your eyes on at all time, right? Let me delete here. These are the correction levels, obviously, and I'm going to start with those that are above 1. Now 161.8 is very important. We got 2.618. This one I'm changing. You see the default is 4.236. This is too this is too ambitious for a correction level. I actually don't use it. I replace it with 1.236, and it's called 123.6. Right? The description is what you call the actual parameter. the level itself is the number, right? The number, the value you actually put to get the levels themselves. So we have 3 right now. We have 1.618, 2.618, 1.236, and all I need is one more, which is the 2.236. We call it 223.6, right? This is the official name, and there you go. Now we got our 4 levels. Let's take a look. I think I missed, oh yeah, this one we don't need the 0 level, so I'm going to delete that. And we're staying with our 4 levels. These are the most important for projection level that, according to my 15-16 years of trading experience, are the most reliable. And I would like to point out the 1618, right? The 1618, which is the opposite, the original opposite. I mean, the natural opposite number of the golden ratio, right? The 61.8. So it's very important as a projection level. Now, whenever you see price, resume to the original move, meaning local correction was over, right? As price began to drop, I thought we're probably back on the original downside trend, and I wanted to know how far it's going to go. So here's what you do. You just apply on that same correction, right? This is the counter move that we had. You apply the projection levels just like that, right? Now you can see the first level, 1.236, right here, and you can see how price reacted to that level. Take a look. When it reached that level, all right, here you go. Take a look at that. I'm just going to do this. All right. So we're talking about this particular level here, 1.236. I wanted to zoom in a little bit to show you the reaction we had here as price lands on that level. Take a look. Touch base a little bit, spike it a little bit, and completely, basically the level, the key level itself completely breaks the downside momentum, right? And price begins to trade a little bit sideways above that level until it breaks it. Now I'm going to go back a little bit, and now I'm going to show you the way I use projection levels, because what I'm looking for is a cluster. Just as I was looking for a corrective cluster last week when I want to measure the potential of a correction, here what you want to do is do the same thing on 2 different moves, right? I'm going to apply the same 4 projection levels on 2 different moves to assess the stronger price target that can be found, right? The most reliable price target, if you will. So what you want to do is you want to look for 2 different moves within the same leg, all right? Basically, you want to find the whole move, and then you want to find one segment of that move, and it has to be the last segment. So for example, here is the full move upwards, right? And the last segment, take a look, would be this right here. This is the last segment. You see what I mean? This is the whole correction, and this is the last segment, right? So obviously the bigger move, the whole correction is the most important part. First of all, that's what you want to analyze. But then once you have all the levels in place, you can take it to the next step and just look for the last segment, which is this one, right? Now let me apply a different color, right? This is the last segment. Let me apply a, let's say, blue, so we can differentiate between these 2 setups. Now you can see what I'm talking about, a projection cluster. This is how it looks like. You can actually see very easily that the first level, the 1.236 of the black setup, right? The first one, let me show you again. Here it is, right? Is amazingly in line, right? Very precisely, right on top of a different key level, belongs to the blue setup, and we're talking about the 223.6. Take a look. Boom, right on that spot. So obviously, whenever that happens, it makes that level, that particular level, that before we just had one key level there. But if you have two key levels over there, it makes that level much stronger, both from the attraction and the repulsion point of view. So price will attract, that key level will attract price to it as just like a magnetic field. But then as price reach that level, it will repel it. Sometimes temporarily, but some other times completely reverse the momentum and the trend. And you can see how nicely price touched base here, and take a look what happened. So I was basically looking for, I was trying to figure out, the end of the downside move, because I was mostly interested in picking up the Litecoin. I was trying to find out where this downside trend is going to end. So when I noticed that price reacted really nicely to that level, I thought, there you go, we might have a break here. Price may actually begin a new upside trend. So I was waiting to see, a reversal, but what happened was price broke that level. Now bear in mind, since it's a projection cluster, actually a perfect cluster, it is as strong as a support as a resistance. Once it turns out to be a resistance, it should be as strong as it was acting as a support level, right? And you can see what happened later on. So that same cluster, right, which was a support at one point, once broken, turned into a resistance. Take a look at that. This is really good stuff, right? I was expecting price to make it, to break through that level, base itself above that level, and that would have been a good sign for me to go back in full power, basically establish a bullish position. So I was waiting for that to happen, but I noticed how price was just unable to break through. So that same cluster that was a strong support now was a strong resistance, and I knew at that point that we're not going to have that full-fledged upside reversal that I was hoping to see. But this is just another example how you can use that cluster not only to gauge a target, but also later on to use it as a protective element. In this case, it was protecting me from entering a bullish position, which was obviously not the right thing to do at that point. All right, so yeah, that's the Litecoin. That's the case in the Litecoin. Now I'm going to show you even more complex situation. We have what we call the projection cluster, but we also have hybrid cluster. So hybrid cluster involves two or more key levels coming from different measurements. So one could come from a correction measurement, where the second can come from a projection measurement. This is why it's hybrid. And both of them fall exactly one on top of the other, or very close to one another, and they and they consider to be just a strong area, a strong range, which is just as strong as projection cluster or corrective cluster. It is also a cluster, just a little bit more complex. So I'm going to show you a case study on the Ripple, and then I'm going to show you in real time, on present time, an analysis, a projection analysis on the Ripple, which I'm actually doing right now to figure out where the Ripple is going to go, because I have a pretty decent size position right now on the Ripple. So let's go ahead and take a look at that. All right, guys, check this out. So we got the Ripple, right? Ever since August 2018, price began to bottom out, right? And the first thing that jumped right into my eyes was the double bottom that we had here. Price for the first time determined this low right here on August 2018. There was a low, then price went upwards for some time, and then it came back and determined the same low, right? That was a interesting double bottom. And when I saw that, this is where I became interested in picking up the Ripple again, because I knew that it was very low. It was trading very, very low. Now, as price began to turn around, I jumped in. I jumped on board. Now, here's what I was doing when I got into that position, right? So, what I did, let me clean up a little bit here. I did the first thing that you always need to do whenever you take a move, right? You look for the last opposite move. In this case, it was this slight upside correction, right? This slight upside move. And so I applied the projection levels, the same 4 levels I'm always working with, and I began to increase the position on the way up. As price was pushing forward, I kept putting more and more money, capital in that position. But then I saw this remarkable reaction on that last level, the 261.8, and you can see why. It is so important, right? You can actually see it. Take a look at the wonderful reaction we had here. At first, this huge spike, right? Spiking that 261.8 and closing well below. But it didn't end there. It were 4 consecutive attempts. Take a look. This was the first, this was the second, then the third, and the fourth. Just unbelievable. A beautiful reaction to that level. And when I saw that, I saw these 2 spikes, the first 2 spikes going back all the way just to close below that level, right? At some point, just think about it. They were trading well above for most of the day. But as the day progressed, price came back and closed below that level on 4 consecutive occasions, right? So I knew that, this is a massive resistance and it's time to pull out. I closed the position. By the way, I've made here about 70%, 70 something percent on the way up. It was phenomenal because it was in a very short period of time. So I pulled out, and I knew that what's probably going on at this point was price is going to correct this, pretty intensive upside move, right? It was a strong upside move. Take a look. This whole move all the way to the very, tip of the spike. So I knew that it is usually, it's typical to have a downside correction to that move. So what I did when I noticed that price was failing to break above the last projection level here and starting to turn around, I immediately applied a correction analysis because I was in a correction zone right now, right? So let me show you what that means. I'm going to give my correction analysis here a different color. Let's give it black, right? So obviously I was talking about more four important levels, right? 23.6, 38.2, 61.8, 76.4. But I like to use 2. I really like to use only 2 levels, the most important ones. The 61.8 and 76.4. I usually don't use the 23.6 and 38.2 because they're too close to price action. So, you can't rely on the 38.2 if it's going to continue all the way to the 61.8 or 76.4, which are the last levels. So I focus only on these 2 levels. And I should say that the 76.4, in my opinion, is the most important one. It is the last one. So I applied on the whole upside move, the 61.8 and 76.4, and here's what I found. I still had that same projection measurement in place, right? So now I have 2 setups. One, a projection measurement. The other is a correction measurement, right? So we have the blue setup and the black setup. And immediately I noticed that there was a pretty impressive cluster, hybrid cluster, right here. Take a look. I'm talking about the 1.23, I'm talking about the 61.8 correction level of the black, right? The black measurement. combined with, let's take a look at that, combined with the 161.8 on the projection measurement, right? Let me mark that for you. So here is the range I was talking about. It's a very, very tight range, right? It's not a perfect cluster, but it's pretty good. I mean, the levels are pretty close enough. So not only I had here a 61.8, but I also had a second key level, which was the same projection level that was a resistance, but now obviously was a support, right? Once it got broken, it turned into a support, and you can see what happened, right? Price completely turned around. The negative momentum was completely broken, and I was optimistic again because I thought that the correction might be over, and price is going to go only upwards from this point on, taking the previous high and all that. But it didn't. It actually didn't. So this is why I said the 76.4 is the most important one, because it's the last one. Whenever it reaches 61.8, there's a good chance that the correction is over, but sometimes it's not, and it's going to continue one step more to the last line of resort, 76.4. And this is exactly what happened here. But I actually noticed that it was going to happen. Why? Because it was aiming again, it was challenging again that same level, that's 2618, which it's completely failed on the previous attempt. And it was failing again on the second attempt. Take a look, right? It was trying to break through again, 4 attempts to break, failing, pulling back again, reversing, and beginning to drop. So at that point, I knew that this is not looking good, right? This is not looking good on the upside, from the upside point of view. And what's most probable at this point was that price is going to aim straight to the last line of defense, the 76.4. That was pretty obvious to me. Once it did land on the 61.8, went for a second attempt, failed, I knew it's going to go straight to the 76.4, so I was waiting for it. I was waiting for it, and I actually declared publicly, I have to say, that at this point, once it reached the 76.4, I'm going to go all in, because it's going to be the end of the downside correction, which means only one thing. It's going to resume the original upside move that it started a few weeks ago. So here's what I found. So obviously I was still using that same correction measurement, right? And you can see the 76.4. It's right here. It's the last level. Price tag 37.44, right? So I had that level in place, but I also had that same projection measurement in place. But you know what? So this is a classic hybrid cluster, basically. The levels are not very close to each other. Definitely not one on top of the other, but they're pretty close. When I see this type of distance between two levels, I usually don't take it face value. But in this case, since it is the 76.4, and it is also, it's the lowest level in the projection measurement here, I just kept my eyes on that range. But I added one more measurement. Take a look at this. So I'm going to give so I'm going to build up the same projection again, right? Let me quickly pull out here the 1.236, right? And I only miss one more level, which is the 2.236. And I'm going to give it a different color. Let's say red. Just like that. So what I did was I still had a move which was untouched. Take a look. The last segment, the last opposite upside segment. Talking about this one, of course. From the very top to the very bottom. Right? And now it's checkmate, basically, yeah, because I covered all the moves, all the possible moves that were needed to be analyzed. Right? And here's what I found. Take a look. The 1.236 right here sitting really nicely just in the middle between, well, the 1.236 of the blue setup, right, the projection blue setup, and the 76.4 of the corrective setup, right here, 37.44. So it sits right in the middle. So what I did was I took just a simple mark, and I marked that range. I just marked it like this, and I was waiting for price to come down. I mean, when I did this complex analysis, price was just breaking below the 200 daily moving average, basically turning around after the failure and starting to challenge the 200 daily moving average and starting basically to break down. So I had that range, I was ready, I was prepared for price to come to that very range, because as you can see, this is a hybrid cluster, right? There are 3 different key levels roughly at the same place, but what I wanted to see is the reaction. Obviously, I don't take these ranges, I don't take these clusters as granted. I mean, I still want to see price itself react to these clusters. Otherwise, they mean nothing to me. You know what I mean? So I look for the actual market to give me the reconfirmation that I'm looking for. So I was waiting patiently to see what's going to happen. And when I noticed after a few days that price was amazingly reactive to these levels, and it actually touched base, it kind of checked in each and every one of them. Take a look. The first touch base here took the first 2, right? The blue and the red. The next one, and this is the amazing stuff. Take a look. Let me close in a little bit. What's amazing to me was that the fact that price in these 2 occasions spiked and managed, I mean, especially in this one, spiked and managed to take all of the levels, but went back just to close above all that range, right? So there were 2 spikes on that range, but both of them ended up above that level. And 2 days later, there was another kind of last touchdown on that range with that spike here, and price began to break away, right? It began to take off. So that was the very last stamp, kind of reconfirmation that yes, the downside correction is over. Price had reached the very last line of defense, right? The 76.4 of the previous upside move. And also, which happens to be a very interesting cluster when you apply other measurements that are in the area, right? So I basically covered all the measurements possible, and I found that beautiful cluster, and it was so priceless, right? I mean, it still is. This is really recent stuff, guys. This is not a case study from a year ago. This is really a few days ago, right? Very recent, very, very real. So you can see what happened on the Ripple with that regards, and you also can guess what I think gonna happen here, right? I'm sure you can guess that. So I think the correction was over, and I'm all in with a bullish position. So I remember I told you I'm gonna give you some real value now, looking forward, right? Instead of just giving you past insights on past situations and events, and now I'm going to try to give you a real predictive value. All right, so let's go ahead and take a look. Basically what I'm going to do the same projection analysis, because now I want to know how far is the Ripple going to go, right? I want to know where I'm going to aim at. So where price reach that destination, it could be a cluster, it could be a range, or it could be just one level on top of the other. I'm going to be prepared to pull out. Well, that's the game plan. That's the principle, basically. So what I'm going to do now, I'm going to erase all the, all these irrelevant measurements right now. I mean, no doubt they've helped me to pinpoint the downside correction, right? The end of the downside correction. I'm going to leave just that mark here, right? And I can get rid of all the rest of the measurement, because now we're going to take it to the next step. So now I want to measure the potential of this upside move, the likelihood of the continuation of this move. How far will it go, right? So I'm going to take a first measurement right here, and I'm going to apply it on the whole move, right? The whole move, like just like that. Let me close out a little bit. Now you can see here's the first level, and and the rest just above it. So this is the whole downside. This is the whole downside correction, the whole 76.4% downside correction of the previous upside move. Now what I want to do is a second measurement that will be applied only on the last opposite segment, right? The last opposite segment, which is this one. But we're going to have to give it a different color, right? So let's use blue in this case. Now I'm going to look for a cluster. Let's see if we can find a cluster. So it's easy to see. Jumping right to my eyes is this particular cluster. Let me mark it down, all right? Let's use the same technique. I'm going to mark down, take a look, this cluster right here. This is basically a 2618 really nicely combined with 1618, right? So the bigger measurement, that's the red, 1618, is combined with the 2618 of the blue, of the smaller one. And I was just marking that range here. Let me be very precise as I can. Now I have a target. I have a range, right? I have a very tight range that will act as my price target, right? My final destination, if you will. I'm going to have a few secondary targets along the way, but that's where I'm going to pull out completely and will expect a downside correction, which I will wait on the sideline, or maybe even, open a short trade with a margin account, or I would wait on the sideline for price to come back and the downside correction. Obviously, I will have to reanalyze the situation, reanalyze the potential of the downside correction, and then I will try to pick it up again. And I will use the same technique to measure the next price target. Let's go and take a closer look at that range. So here you go, right? And I'm going to put this price tag so we can see. This is the very beginning of the range, and you can see the whole range. That's it, I'm done. I mean, I can't scroll anymore, it's so high, so this is pretty much the end of the screen. But it's right there. Here it is. Here's the yellow rectangle that I've marked here. And you can see the very minimum level. Whenever you have a range, right, where you're aiming for a target, but the cluster is not perfect, so it creates a small range. You always aim for the first level, right? Not the last one, not the upper one, the lower one, because that's the safest play. You always want to go with the safest play, right? You don't want to be greedy. Greedy is not a good characteristic when it comes to trading the markets. So what I would do is I would aim for this particular price target. This is going to be my final destination. 1.0166 to be precise, right? We're talking about more than 100% of potential return, which, by the way, could be covered in literally a couple of weeks, right? I mean, I'm not suggesting that it will, but potentially speaking, it definitely can. It can cover this distance in a few days, really, in a week or two. But we'll see. I mean, it is quite a bit of a move, pretty ambitious. We're talking about more than 100% of potential return here. That's not unusual for the cryptocurrency market, but it is a decent move, so we'll see how it goes. Like I said, I have established a decent sized position, but as price continues to push forward, going my way, I will continue to increase the position all the way through, basically, until I hit my official price target. Right? That's how I work. So there you go, guys. I think I've showed you a really interesting and very valuable, by the way, technique, Fibonacci technique, right? Both from the corrective side and the projection side. So you'll be much more equipped now to handle corrections and potential projections. All right, very, very important tool as far as analyzing the market goes. I hope you enjoyed that session, second part of our Fibonacci cluster analysis. We'll see you on Tuesday with our market analysis video. See you then. Bye-bye.